Hello traders, how are you? Vladimir here from Home Trader Club. Welcome to our weekly Forex forecast. In today's video, euro dollar, pound dollar, dollar yen and gold. But before that, what a week it was. The court in the US simply, I would say, shut down Trump's plans with the tariffs, claiming this is illegal and the president does not have the rights to do so. Since then, lots of voices, we will find a way, the court is corrupted, and so on and so on. Expect a lot of drama on the coming months on this subject. Trump comes as always during the week claiming that he is tired playing the nice guy with China and the tariffs agreement they had with them, a trade agreement, claiming that China broke the agreement and so on and so on. So expect another drama on the coming weeks or even months on that regards. We would see a lot of roller coaster from the market reacting to all these kind of news. So let's take a look on the charts and see what do we have for this week. A quick one before the charts, as always. Big thanks, thumbs up to 8K Broker for supporting our community. You can continue and enjoy all the amazing offers we have with 8K Broker, including access up to 1 full year to Home Trader Club, all our trading systems, the tools we have in our marketplace, private mentoring sessions and more. Please refer to the link below this video in the description. Euro, dollar would be our first one. Last week we discussed about two scenarios for the euro dollar, but one of them was that we should expect the euro making a drop before it actually makes the climb to the upside after that. And the biggest question is what will happen now. So now the euro dollar is on a decisive moment, and this is the moment of truth, meaning it will either hold this massive supply zone and start to push to the downside to complete this structure ABCD from the higher time frame, or the euro dollar is going to hold this zone, move inside, and then pay attention to this key trading level based on the volume profile, huge volume zone. If it manages eventually to break up above that, that could be the leading sign for the buys. So here are the two scenarios I look at the euro dollar. If this level managed to hold, the euro can develop its bearish move to the downside, and for that to happen, what I would like to see on the euro dollar is basically regaining the momentum. If it managed to regain the momentum, making its lower highs, lower lows, then we can start looking to sell these rallies indeed. If it goes inside the range, as is explained here, and managed eventually, it could be a range, it could be either some sort of mini triangle here and then a breakout, then the euro dollar is very likely going to push to the upside. What and where can we expect the euro to go? If it happens, then I would expect the euro to go and to climb somewhere in between 117 to 119 until this divergence would be completed, and from there, very likely, much longer sell. So the coming weeks are going to be very decisive for this pair. And if we take a look on the numbers, this is our markets trend snapshot inside our members area. So we can see that the month is almost flat, around the 0%. The last 7 days only 0.5% change, and so does the 24 hours flat, which means the pair is expecting for something, right? And that's a very decisive moment for this pair. So these are the two scenarios I follow on the euro dollar, both for the buys. If it managed to place itself above the volume profile zone, and as you can see, this zone here, it's not only 4-hour chart zone, this is a daily and weekly key levels. So if it managed to maintain that and break above that, right, that could open the doors for the final rally. But as long as it holds, we can easily see the euro making that drop to complete the ABCD from the higher time frame. Pound dollar, we discussed about this divergence on a daily chart on our last week. However, the ideal scenario if it could make it from higher level. So why specifically do I watch this one from higher level? As we have some major zone here, it would be great if it could clean this zone before it is making the reversal. But it could actually happen without that as well. So here are the two scenarios I look for the pound dollar. On the short term, the pound dollar has some key levels to watch. It has a rising trend line, it has a broken resistance that acts support, and it has this resistance in these waves which act as support as well. We are talking in anything around the 134 down to 133.40-ish. So one of the scenarios we should be following is if the pound dollar managed to create ABCD correction, holds this zone and start its climbing to the upside, basically going to do a final rally to complete another peak with this divergence before the big turnaround will happen. But since the daily divergence already building up, there is also the alternative scenario. And the alternative scenario, if the pound dollar managed to make some sort of a zigzag, which means push that to the downside, ideally to below the trend line, then come back in a corrective structure as ABCD or a range, and then break below that in a double time frame trend line breakout. If that happens, that opens the doors for a deeper correction, something like that, and then we could expect the pound dollar drop back to the area of 132, maybe also down to 130, which you can see here. That's a demand zone and volume profile based area and the dynamic 200 moving average. Also, if you will plot Fibonacci retracement on this zone, you would say that we are there around the 23.6 Fibonacci that could be retested down to 38.2 level of Fibonacci. And if we take a look on the numbers, the pound dollar is pretty much similar to the euro dollar. It is very flat, still positive on last 30 days and last 7 days, but it's getting flat, close to 0%, no significant changes, which means it is slowing down. Slowing down usually means the market is preparing for the next move. And again, there are two scenarios, one for the buy for a new peak, or for the last peak in that case, before a big turnaround. Second scenario, we're gonna create some zigzag here, as I showed before, break down and go with much deeper correction. Both scenarios are very welcome to happen. Whichever the market follows, I would be there to trade it. Next one, dollar yen. We discussed last week we want to sell the rallies, and we marked here couple of very important levels on the horizon, and the dollar yen managed to make a massive rally during the week, and look what happened then. A bearish hidden divergence, classical sign, broken support becomes a resistance, volume profile based level, again absolutely fantastic zone, and then boom, the sellers take the control. So what will happen with the dollar yen from here? My view did not change since the last week. I still expect the dollar yen to complete another low until these two waves could be completed, and then on a daily chart I would expect to see the bullish divergence building up. Then we will have an absolutely classical scenario for a long-term buy. But until then, my view is bearish. So I'm after sales. The ideal scenario here is we either push as ABCD or some sort of a range and managed to go then and continue to the downside. As simple as that. Sell the rallies was and will remain my plan. In a rare case, what could happen here is that the daily chart would develop a little bit deeper correction first of all and only then a sell, but again, for me it is sell the rallies. And in terms of numbers here, the picture is shifting from a very positive run in the last months. We are going still flat, but to the negative zone. That usually represents the reversal, and that's why I believe also following the higher time frame, this ABCD should complete itself ideally to this trend line, or at least closer to the key zone. We also have, take a look here, broken resistance that becomes support and this demand level. So very high probability this zone should be for the long run retested, and that's why for me it is sell the rallies. The final one would be gold. We discussed last week on this scenario: bearish divergence, bearish convergence, and then sell the rallies. So far, and this is similar to the euro dollar we saw before, so far gold maintains the structure. It has lower highs, lower lows, which very possibly means we are still in the corrective structure. And as long as this structure holds and these peaks manage to hold together with this trend line, the gold can actually go and push it to the downside. I want to remind you that according to the higher time frame, we are bouncing off overbought levels. This is a monthly and a weekly chart, which means later or sooner we are due to a significant correction. So as long as these levels I mentioned hold, the plan is bearish. However, we mentioned the tariffs before, we mentioned all the mass US, China, Trump new tweets, and so on and so on. Very high probability the market is preparing for something. And if it moves, instead of gaining the momentum, if it moves as a range and does not make lower highs, lower lows, and then break above that, here is what we should be doing. I will mark it as a different color, right? If it manage to break it up here, place itself above the trend line and above this volume profile zone, look to buy the dips then for a new high, or at least to retest the previous high, with the one logic in mind. In that case, the daily chart then is very likely to rally to complete this divergence before the next big sell-off will take place. So watch out for gold, it is developing very interesting. That's it for this video. I hope you find value in it. Please don't forget to like if you do. And also, if you are new to our channel, please consider to subscribe with the subscribe button below this video. I also want to invite you to our trading family, Home Trader Club. Get your access to our full comprehensive courses, our trading systems, our marketplace, real-time education and real-time trading opportunities. Join us with the link below this video in the description. Thanks for watching. Best to you and yours. I'll see you soon with more. Good trading. Bye for now.